Welcome everybody, good morning, and welcome to another virtual presentation brought to you by the Boca Chamber. My name is Chastity Navarre, I'm the events manager at the Chamber, and we're so happy that you're here with us this morning. We have the great pleasure of having our very special speaker today, get an official introduction of our speaker, Neil Bradley. But I'm going to turn it over to Sophia so she can go over some quick Zoom tutorial for you. Sophia?
Hi everybody, good morning. My name is Sophia. Just so everyone knows, this entire presentation will be recorded and you will also receive the slides afterwards. But everyone is muted right now just to help with the quality of the presentation. So we will wait until the very end to do a Q&A. And to do so, if you go to the bottom of your Zoom screen, there's a toolbar. If you click the chat button, you'll be able to direct your questions to me if you don't want your name to be shown, or to everyone in the group chat. Or we can unmute you so you can vocalize your question to Neil. Thank you.
Thanks, Sophia. And here with us today is our very own President and CEO, Troy McClellan, and he will be introducing our speaker. Troy?
Thank you, Chastity. Really, we're extremely fortunate today to have Neil Bradley, who's the Executive Vice President and the Chief Policy Officer for the United States Chamber of Commerce. Neil is responsible for the overall policy direction of the Chamber, and he spent about 2 decades working for leadership in the House of Representatives in Washington, D.C. I've known Neil for many, many years, and one of the things I really appreciate about him is his ability to explain large and complicated pieces of legislation and break them down into terms that we can all understand. And the newly signed Federal CARES Act a week ago today, I guess, signed by President Trump, is one of those 880 pages of legislation to help get this country through some interesting times for sure. The other thing I'll just add, and Neil has a very, very long bio, which he's very humble, doesn't want us to read. But I will tell you this. We are extremely fortunate that we have Neil Bradley in Washington right now, working with Congress, the White House, helping us through these challenging times. He is also on the front lines of this from that standpoint. I don't think Neil Bradley sleeps. He always looks great, but I don't think he sleeps. And so, Neil, thank you very much for hopping on this call today. Today is a significant day in terms of one of the new pieces of the legislation, the loans, and Neil will get into that as well. So with that abbreviated introduction, I'm going to turn it over to Neil Bradley.
Thanks, Troy. Thanks, everyone, for joining us this morning. We're going to do a quick presentation that was mentioned you'll get afterwards, where we're going to walk through some of the major provisions of the CARES Act, and then we really want to get to your questions. So let's start with a quick overview. This 880-page bill packs quite a punch, $2 trillion, actually $2.2 trillion. You'll often hear people talk about a $4 trillion figure. That's because there's about $450 billion that can be used by the Treasury to support the Federal Reserve. And the Federal Reserve can leverage that money 10 to 1 to support the overall economy. So when you think about it in that context, it's really a $2 trillion bill with the option of a $4 trillion in additional support. You'll often hear this referred to as the Phase 3 bill because this was the third in a series of bills passed in response to the coronavirus. For individuals, let's start there. Automatic payments, $1,200 per individual, $2,400 for a joint return, plus $500 per child. The IRS, you don't have to do anything. The IRS will be providing you with a check based on your 2019 return if you filed for 2019. If you haven't, they'll just use your 2018 return. If you have direct deposit information with the IRS, that's what they'll use to deposit the check. Importantly, this phases out above incomes of $75,000 or $150,000 for a couple filing jointly. We all saw the devastating news yesterday, over 6 million initial claims for unemployment. As much as we're doing to support employers at this time, We know during this period we're going to have lots of unemployment. So there's some important things to realize about what this bill does for unemployment benefits. First, if you're at all familiar with the unemployment system, you know there's lots of restrictions about eligibility. If you've exhausted your benefits, if you happen to be an independent contractor or a sole proprietor, for example, almost all of those are waived under the federal legislation if your unemployment is related to COVID-19. We also, the federal government is providing an additional $600 on top of your regular state benefits. Whatever the state calculation is of your benefit, there's an additional $600 per week through July 31st. Lots of folks are asking about kind of the balance between bringing people back to work and unemployment. Understand that one of the key provisions remains. Your eligibility for unemployment is conditioned on not being able to work. So when your employer calls you back to work or offers you to come back, your eligibility ends. And even though there's a lot of new federal money here, this is still a state program and you go through your state office. We want to spend the bulk of our time this morning focusing on provisions for employers. And we've grouped these into three buckets: provisions that benefit all employers, provisions that are focused on larger employers, and then where we'll spend the bulk of our time, provisions impacting small businesses, the self-employed, independent contractors, and nonprofits. So let's start with all employers. Perhaps one of the most overlooked provisions of this bill is the ability for employers, both for-profits and nonprofits, to delay the payment of your employer payroll taxes between now and the end of the year. All of you know, you sign a check to your employees, you got to turn around and write a check to Uncle Sam, remitting the payroll taxes, both your portion as the employer and the employees. Between now and the end of the year, you can hold on to your employer portion to help with your liquidity problems, and then you'll pay that back. 50% of it at the end of calendar year 2021, the remainder at the end of calendar year 2022. Now, there's a lot of these programs that interact with each other. A little bit later, we're going to talk about the Paycheck Protection Program. This is the loan/grant for small businesses. Understand that if you take that and you get a loan forgiven, you can no longer defer your payroll taxes. For businesses, there's a lot of tax changes too, all designed to improve liquidity. If you have losses, net operating losses, you can carry those back now for 5 years to apply against taxes already paid. If you have AMT credits, you can accelerate the recovery of those. If you have interest expenses and you're up against that cap on deducting your interest, you can now elect to expand that cap to up to 50%. And if you're in the restaurant or the retail business and you've improved your property over the last couple of years, you've probably ran into the fact that you can't fully depreciate or expense that improvement because of an error in the 2017 tax law. That's fixed. These are all things that you should be talking to your tax accountant about as a way to improve liquidity in the coming years to help you meet your obligations. Another provision that applies to all employers, and this was a late addition to the bill, is an employee retention tax credit. This also applies to all employers, for-profits and nonprofits. If you are fully or partially shut down as a result of a governmental order, like the stay-in-place orders or shelter-in-place orders that we see, or you've experienced a 50% drop in gross receipts in a quarter relative to the quarter in 2019, you're eligible for this. What do you get? To the extent that you keep paying your employees, you get a 50% tax credit that's refundable against the first $10,000 in wages, which is a fancy way of saying $5,000 tax credit. There are different rules based on the size. If you have more than 100 employees, the law says that the credit only applies to employees that you pay who are not providing services. That term is not defined. One of the things we're working on at the U.S. Chamber with the Treasury Department and the IRS is to figure out what that means. Does that mean that they're literally not doing anything? Or does it mean that their normal services have changed and they're teleworking, for example, or their hours have been reduced? We want clarity on that. That doesn't really matter if you have 100 or fewer employees, because the law says it applies to all employees you pay during that time when you're shut down or that quarter where you have a drop in gross receipts. Again, interaction here. If you get a paycheck protection loan, you can't also take advantage of the employee retention tax credit. It's one or the other. Let's talk about mid-sized and larger employers briefly. This is really designed to be a loan program. There's a total $500 billion. A portion of that is reserved for the airline industry and critical national security businesses. Those folks will go straight to the Treasury. They're already working through that with the Treasury Department. The remainder of the money, the 454, that's what we expect to be used to stand up facilities at the Federal Reserve. That will support lending by private institutions to businesses in the United States who are suffering revenue loss. This program has not been set up yet. We think this is coming early next week. We hope it's coming early next week, and we'll learn all the terms and conditions then. But some things to expect based on the legislation, some restrictions on stock buybacks, dividend payments, and executive compensation if you're one of the larger employers that takes advantage of this program once it's established. Now let's focus on the small businesses, self-employed, independent contractors, and nonprofits. And I really like to emphasize those last three because those are groups who are often not eligible for programs like this, who are eligible as a result of this law. The biggest, most favorable program in terms of benefits is the Paycheck Protection Program. This program for small businesses is starting today. Folks can go to a bank today. You can go online, download the application, and figure out applying for this beginning today. For independent contractors, sole proprietors, or the self-employed, the start date is April 10th, so a week from today. What is it? $350 billion in loans for small businesses. That's generally less than 500 employees. But if you have more than 500 employees and you otherwise qualify for an SBA loan program, you likely qualify here. You're a 501c3 nonprofit, you qualify. You're a sole proprietor, you qualify. Independent contractor, you qualify. Also, and I know this is important, particularly in the Boca area, if you're in the restaurant or the accommodation business and you're part of a franchise group, for example, normal rules say we aggregate all that together, and that could push you because you have multiple locations over the size limit. The law specifically states for the accommodation and the food service, we're going to judge you on a per location basis. So we're going to look not at the total group, we're going to look at your location, and if you have less than 500 employees, you qualify. So don't just assume because of the normal rules, if you're in that sector, that you don't qualify. How much can you borrow? 2.5 months of payroll, up to $10 million. Payroll is generally the wages and compensation you pay to your employees, plus, and the biggest one is healthcare expenses that you pay as an employer. How do you get these? You go through your national or local lenders. Late last night, the Small Business Administration on their website launched a finder tool. I went in this morning, I inputted my zip code, and it pulled up the lenders in my area. There are going to be more lenders who are added to this. Very minimal requirements, no collateral, no personal guarantee. Here's the real kicker. We don't want small businesses having a huge debt overhang at the end of this. So the loans can convert to a grant equal to the amount spent on payroll, rent, interest on mortgages, and utilities for the 8 weeks after the origination of the loan. Think about this. You apply for your loan based on your past payroll. Now you get your loan. We're going to look at the 8 weeks after that and how much you spend on this. Late last night, the IRS and the Treasury and the Small Business Administration issued guidance that said they were going to cap the non-payroll expenses at 25%. So we're updating our guidance to reflect that, and we'll get to that in a second. Here's two other kickers. We calculate your maximum loan forgiveness, and you can lose some of that loan forgiveness if you've reduced your employee headcount or if you've cut wages by more than 25%. And so there's a proportional reduction there. So two things you want to think about. What am I paying people in the 8 weeks after I start the loan, after I receive the loan? And am I keeping up my employee headcount? Importantly, we know lots of small businesses have already let folks go. You can bring those employees back and you won't be punished. In fact, you'll receive additional benefit for bringing employees back. We have a guide on the uschamber.com website, /SB loans. We walk through the math that you will do to calculate your benefits, walk through some of the documentation, et cetera. It also links to the resources that were just put out last night by the federal government. Let's go to another program, economic injury disaster loans. So if you've been through hurricanes, other natural disasters, you know that you sometimes can qualify for a disaster loan for the SBA. They've designated the coronavirus as a nationwide disaster. You can borrow up to $2 million in working capital loan. It's a long-term loan up to 30 years. You see the interest rates there. Payments are deferred for a year. They've lowered the underwriting. It's really going to be based on credit scores. You can get up to $200,000 without a personal guarantee. You don't even have to provide collateral for up to $25,000. And new, this has never been done before, you can get up to a $10,000 emergency grant within 3 days of applying. You apply on SBA.gov. You can say, I request the emergency grant. And importantly, that doesn't have to be repaid. Even if you end up being denied the loan, you get to keep the emergency grant. The only interaction is if you take this and that paycheck protection loan, they're going to dock the $10,000 off the forgiveness and the paycheck protection loan. And again, you can go to SBA.gov this morning and apply for that disaster loan. Let me end with two other things that aren't in the CARES Act, but are really important, particularly for small employers. These come from the Phase 2 bills, and these are requirements that went into effect on Wednesday. So as of Wednesday, if you're an employer with fewer than 500 employees, you are required to provide 10 days of paid sick leave to your employees if it's related to COVID-19. They're ill, they're quarantined, or they're at home taking care of a family member or a child whose school or daycare is closed. Leave is based on your rate of pay. If you're the person who's sick, if you're taking care of your children or a family member, it's 2/3 of the rate of pay. It's capped per dollar. We're used to unfunded mandates from Washington. This one happens to be a funded mandate. The small business will be reimbursed dollar for dollar for what you spend to provide this paid leave. We've gotten lots of questions. Can really small businesses, those with fewer than 50 employees, be exempt? The answer is yes, but only to the extent that someone's taking the leave to care for that child because their school is closed, and only if the business owner says that having them take leave threatens the viability of the business. And by the way, if you can telework, then you don't qualify for the sick leave. Similarly, a paid family leave benefit. So presumably you have a child's school who's closed, you take the 10 days, you can get up to 10 weeks of paid leave, again, reimbursed by the federal government, again, 2/3 rate of pay, maximum of $200. Again, you can be exempted if you have fewer than 550 employees and it threatens the viability of the business. So I know that was a lot to walk through quickly. I know the Boca Chamber has a lot of resources on their website that you can go to. We also have web resources at uschamber.com, including survival guides for small businesses and other how-to guides at chamber.com/co. And so with that, we really want to get to your questions, and I'll turn it back over to Troy, and we can go from there.
Neil, thank you for that summary. As I mentioned in the introduction, Neil has this great ability to help us understand some of the complexities of that bill, and you did just that in very good time. So, yeah, I want to also add to what Neil said that U.S. Chamber has the most amazing resources. You go to bocachamber.com, and we link to all of that great information that Neil just mentioned, all those guides, all the resources as well. So you can channel everything through us and then link right to all their good information. Neil, I think, so today, if Neil, if I might ask the first question. So as you mentioned, today is the first day that the banks are open, if you will, to start engaging in these loans, and specifically the Paycheck Protection Program. And we've been in contact with all our member banks, all the banks here in our local community, and they seem to be ready. But in speaking to some of them, they were a little bit hesitant to how the program might work today. Any insight on what we might be talking about at 5 o'clock this afternoon versus 8:30 this morning?
I think today could be bumpy. So, you know, think about this. We were going through 30 pages of regulations last night at 11 p.m. Banks were doing the same thing. They had updated forms that they were given last night where some of the terms and conditions had changed on those forms, right? And it go in both directions. In some ways, folks who are ineligible on the form that was released Wednesday are now eligible. And other ways, there are new restrictions that didn't exist. And so we're all going to have some patience working through this. Understand that while the lender, your local lender, is the first spot, they're collecting this information. They still have to go back to the federal government. So you fill out a form, and then the lender has to fill out a form to submit to the federal government. And so the thing that we don't know yet is how long that second process is going to take. So even if you do everything, you got all your documentation, your lenders working quickly, that still has to go back to the federal government, and we don't know the turnaround time there. So we're gonna have to be a little bit patient here. For the government, this is like super warp speed to do something in a week, but we'll have to get through it over the next couple of days.
And if I can just add to that, you know, our lenders are indicating that they will give priority to their existing customers who are applying for these loans today. So we certainly recommend that you communicate with your existing banking relationship at this time, because some are not only just making it a priority, some will only take their current banking clients at this time as we go through it. So very good advice. Patience is going to help us certainly today and through the next few days as they work through it. Okay, Sophia, do you want to, I know there's questions are coming in, so going to have you direct those to Neil, or are we just going to open it up to everybody individually?
Nope, we actually already have quite a few questions in the chat already. So starting out, one person said, paycheck protection need additional guidance on. Is it excluded if we have employees that earn more than 100,000 each year?
So great question. Great question. So if you have an employee, what it does is it only allows you to count for purposes of the loan and loan forgiveness, wages below 100,000. So if you have someone who's making $125,000 a year on an annual basis, you get to count the first 100,000. You can apply for your loan based off that. You can get forgiveness based off that. You just can't count the additional 25,000 that's above the 100. So it's not designed to exclude you just because you have employees above 100,000.
And it was me, if you may ask, can I ask a follow-up on that one?
Please.
So I'm a startup. This was my second year in business. Last year, you know, I had people who didn't make 100K, but they joined like mid-year. Their annual income was supposed to be, if they worked for the full calculator year, was 135K, but their W-2 was only 70,000 because they joined mid of the year. This year, you know, we're trying to balance the cash flow. You know, we're looking at what's in the bank and what's the pipeline of business. Our client has started to, you know, in my business, they're saying, we like your work, but we can't pay you, so hold. And you know, we're having weekly meetings with my partner and say, should we start taking less salary? Should we start drawing less salary to conserve the business of continuity? So we all are wanting to draw 130K this year, but based on the business atmosphere, we might say, let's take 50% cut and pay other employees to keep the business afloat. Will that affect, like, should it reflect last year numbers or this year numbers?
So there are two things you want to think about: the how much you can borrow and how that's calculated, and then how your forgiveness is calculated. So with respect to how much you're borrowing, they're taking a snapshot in time. So if you were in business all of 2019, the snapshot in time is your average monthly payroll in 2019. And we've talked to lots of businesses who are in your situation, right? They added employees, they've been growing. So that's going to look really wacky. The current guidelines don't provide any exception for that. Doesn't allow you to do anything special because of that. So it is kind of, at the moment, until they provide clarity, it is what it is at that average monthly 2019. Now,
Okay.
with respect to your forgiveness, remember, you're looking at the 8-week window after you get the loan. You are not, if you cut someone's salary who earned more than 100,000, you're not penalized for that, because they anticipate you doing exactly what you suggested, that, you know, small businesses will cut some of their higher paid employees, the owners, to help spread that around. So you don't get penalized for that. And they'll be looking at that 8-week window and your payroll costs there.
Thank you. That helps a lot.
Next question, I have a two-part question from Randy. You mentioned there were additional benefits if you called employees back that you have already laid off. What are those benefits? Also, it says call back within 30 days. 30 days from when?
So what this, and we'll tighten that language up a little bit on this based off what we got last night. But the real benefit is that you get to maximize your loan forgiveness, right? And so if your loan forgiveness is based off looking at your employee headcount after you receive the loan versus looking back and you've already laid people off, you could be penalized for that, including people that you lay off today or tomorrow, and I think it's through April 26th, so through the 30 days after. If you bring those people back and you maintain them on the payroll by June 30th, then that doesn't dock you for your loan forgiveness. But remember, when it comes to loan forgiveness, they're going to look at two things. What did you spend on payroll in the 8 weeks afterwards? And this is just racking up the dollars, counting them up, and plus utilities and mortgage. And then what was your head count? And so those two things can operate independently. So you're going to want to both be paying people in the 8 weeks after you get the loan, and you're going to want to keep your head count up to maximize forgiveness. I get a lot of questions that say, well, we may still be closed, right? If I get a loan next week, I may be closed for another 3 weeks. Am I expected to pay employees with the loan proceeds when we're closed? The answer to that is yes. That was Congress's intention. Congress's intention was, we're going to give you money for you to keep paying your employees whether you're closed or not.
Nat asks, is there a requirement that you have a banking relationship with the bank?
No, but Troy's exactly right. Because of the requirements on banks, on some of the certification, they're starting with the customers that they know, because those are the easiest to certify and process. But there is no requirement that you have a pre-existing banking relationship from the federal government side. Banks are making a smart decision to start with the ones that are easiest to process, with the ones that are easiest for them to certify, because they know the customer. There are certain regulations that borrowers don't see that are imposed on the banks, like know your customer rules, anti-money laundering rules. The banks are still on the hook for all that, so they still have to figure out who you are if they've never met you before, to avoid running afoul of the law.
We have another question. Juan asks, how does paid leave interact with PPP?
Great question. There's a general rule here. You can't double count money for the same purpose, and you can't count money that someone else is giving you, in this case, the federal government, for another purpose. So if you have paid leave that's reimbursed by the federal government, that's the federal government paying those wages at that time, and you can't claim it for your payroll expenses.
We have a question from Jennifer. How do you prove you have been affected by COVID-19 if you can't get a test or diagnosis?
So the test for, well, I'm not sure if they're referring to unemployment insurance or for the PPP. For the PPP, it's a certificate. You certify in good faith that you've been negatively impacted by the coronavirus, by the shutdowns, or that you expect to be. I think generally most people fall into that category. With respect to unemployment insurance or paid leave, for paid leave, there's guidance on the Department of Labor's website that kind of gets into that a little bit, about like whether you can require a test, et cetera. But if that's what they're looking at, you should go to the Department of Labor Q&A, and they have about 60 questions that include some on this.
We have a question from Cled. I'm sorry if I mispronounced your name. Would you please review the $10,000 emergency loan? I applied last night on the SBA site.
So the way it's supposed to work under the law is that you apply for that economic injury disaster loan. At the time of application, you say, I need the $10,000 emergency grant. And within 3 days, SBA is supposed to provide you with that grant. Late yesterday, we ran into some problems out, I think it was out in the mountain states, coming out of the regional office of the SBA in Denver, where they were telling people they couldn't get the full 10,000. That's not what the law says. And so this morning, our team is working through to make sure that SBA is doing what the law says and providing that full 10,000. If you run into that problem, let the team there at the Boca Chamber know. They'll let us know. We're trying to make sure that they do what the law says, which is that you're entitled to that $10,000 grant.
For PPP, could you please elaborate 8 weeks of payroll after the loan approval?
So this is after loan origination. So this is the snapshot in time that will be used to calculate your loan forgiveness. And so it's super confusing, and they did it, they're working fast here, right? So you borrow based off 2.5 months of payroll, but you can't count your rent and you can't count utilities. But then when we get to forgiveness, we're going to base forgiveness off of 8 weeks of payroll. So we're shortening that, by half a month. But then we're going to allow you to add in those costs for rent and utilities and mortgage interest. So it's a snapshot in time. As you're thinking about this loan, one of the things that I encourage folks to think about is, if you're getting the loan on the basis that you want to maximize the loan forgiveness, you need to be prepared to maximize your payroll payments in the 8 weeks following getting that loan. If you wait a month and you're bringing people back and then you're paying them, you might be shortchanging, depending on how you do your payroll, your own ability to get your loan forgiven. So just think about this in steps. I'm applying for my loan. What do I got to do beginning the day after I get my loan to maximize my loan forgiveness?
Thank you. Jeffrey asks, I have already had 2 different sets of paperwork from my local bank. The second one stamped draft. We do not have the correct paperwork yet. When can we expect it?
So the latest paperwork was posted last night. The easiest way I found it, if you go to treasury.gov, and there's a little red bar at the top, and you can click on that and it'll take you to a page. And I think it's the bottom one. I think it's one of the 4 or 5 there that says application.
Robin asks, what do you do when you have a 1099 plus W-2?
As an individual. So there's a lot of confusion about this, but the way the borrowing works is that if you're an employer, you're borrowing based on the wages that you pay people, not the 1099 income that you pay people. So there's a place you can check that you pay people 1099, but that doesn't get factored into how much you can borrow. If you are a 1099 worker, you're an independent contractor, you, beginning next Friday, can apply on your own. Now, if you're both, let's say you own a business and you're also doing work as a 1099 for someone else, you probably are not going to be able to borrow both as an employer and as a 1099. In fact, you're required to certify that you're only going to take one loan under the program. And at the moment, there's no way, based on the forms, to mix those 2 income streams. That could change in the next week as we get guidance for independent contractors, but that's not the case today.
Next question. PPP loans were 100% backed by federal government, so the banks would have little risk. However, some banks are saying that these are high-risk loans because of the fraud.
It is designed so that the banks have low risk. It is 100% federal guarantee. There is relief for the banks with respect to their reserve requirements and their lend ratio and the normal things with respect to these loans. They still, as I mentioned earlier, they still have some liability. They still have to know who the customer is. They still have to make sure that they're enforcing anti-money laundering statutes. And so I think a way of thinking about the risk isn't so much the risk of a default or that you're lending to a borrower who may not have income to pay. The real risk is there's a lot of people who are going to be going to apply for loans today, and folks, banks have an obligation to know who those people are.
Thank
And
you.
so that includes some risk, obviously.
Next question is from Casey. I applied for the EIDL loan and 10,000 emergency fund a few days ago. How long does it take to receive? How do we check on the status?
So all those programs are run through the SBA. We've been talking to people who've encountered similar problems. You should have gotten a reference number when you did your loan, and you should be able to go back and check using that reference number on the SBA's website. But their system is beginning to crash, has crashed. They've restored it. They're having some processing problems too.
Next question is from Lisa. Certain states also offer bridge loans, and through the FAU SBDC, there are Florida bridge loans. Do those impact businesses applying for PPP or EIDL?
So there's nothing in either the statute or the regulations that came out last night with respect to PPP that would eliminate your ability to do that. Understand that they can continue to issue guidance and rules and regulations on this. And so I don't know that they won't in the future, but there's nothing today that restricts that. My best advice to folks who are worried about something like this is to think about the general rule that is applying for the federal government programs and generally applies in life, which is you can't borrow $2 for the same $1 of expense. And so, if you're going to a bunch of different people and saying, here's what I'm borrowing for, and I'm getting multiple people to loan me that money for that expense, you could find yourself in trouble. So that's a good, just general rule of thumb to avoid problems.
Donna asks, if you have some part-time employees, how do you calculate appropriate FTE for them?
So in the statute, part-time employees count just like full-time employees for headcount purposes.
Thank you. Next question is from Michael. Can you give forgiveness if your employees that you reduced hours on are collecting unemployment through the short-time compensation program through state of Florida?
So is this a program, this is a work share program where you're reducing you pay them and the state's picking up part of it? They're all called different things in different states, but I think that may be what the questioner is describing. Troy's nodding his head that may be it. If that's the case, there's no prohibition here, but remember what you're being judged on for your loan forgiveness. You're being judged on what you, the employer, pay with the proceeds from your loan. And remember what their intention is. Their intention is that you're keeping those employees and you're paying them just like you were before February 15th and the outbreak of the coronavirus. So while there may not be a prohibition on that, you could end up dinging yourself if you go that direction.
Next question. If you do not have W-2 employees, but you have 1099 employees, can they apply for PPP? Can they also apply if an individual is self-employed with no employees?
So let me take this in 3 bites. The first bite, which is the most confusing, which is the form asks you in applying, do you have employees or 1099? You pay 1099 contractors. And a lot of people said, oh, great, I'll be able to count that. Then, so that's just a check to see that you're eligible. You got to have, as an employer, you either have to have employees or 1099. Then when you get to the calculation of how much you can borrow, they don't count payments to 1099 employees. They only count payments to wages. So I've talked to some folks who say, we only have 1099 employees. Do we qualify? Yes, except that your payroll calculation is going to be 0. So you qualify, but you don't. Independent contractors can apply on their own. Sole proprietors, the self-employed, can apply on their own. And if you think about the way they designed this, and we were in really close contact with Senator Rubio's staff, the Small Business Committee, and really I commend the job that they did in short time putting this together. What they wanted to do was have an avenue for employers to get it for their employees and independent contractors to get it for themselves, and that's what they've established here.
Thank you. Next question is from Randy. The documentation required beyond the application looks loose for the PPP. What should employers focus on providing?
So the big thing that they're looking for, in addition to the certifications and that you existed before February 15th, what they're really looking for is your calculation for average payroll. And this is an area where it's been a moving target over the last 48 to 12 hours about what kind of documents required. The best kind of documentation is tax forms. But a lot of small businesses use payroll processors, and they're the ones who are doing the tax forms for you. So we're working with those folks to find out how you can get documentation that you can use with your financial institution for those purposes. But if you're thinking about the documents that you have, the best are tax documents that show your payroll expenses.
Next question. What about paying restaurant employees who earn a small hourly amount and the bulk of their income comes from tips? Would the amount they are paid be adjusted? She said, I'm assuming this would apply for the PPP.
That's exactly right. And yes, you can adjust both. As you calculate your compensation, you can provide an adjustment for tips. And when it comes to loan forgiveness, you can count payments that you're making to an employee in lieu of tips towards that loan forgiveness. So they've contemplated exactly that scenario, and they've tried to make it so that you can take advantage.
Sasha asks, for PPP, employer salary could be part of the employee wages or not?
So if it's salary and it's wages that you're paying yourself, yes, up to the 100,000. So it does not distinguish between a owner employee and not. We've had some folks say, well, I take a dividend at the end of the year from the company. You're going to want to look really closely at how that's treated, because if it's not treated as wages or compensation, you could run into trouble there. So there, you're going to want to be really careful as you calculate that. But if it's wages, it's wages.
Next question is from Lionel. Can offshore employees be included in PPP calculations, or is it a U.S. employees only program?
U.S.-based employees only.
Gotcha.
There was some confusion. I'll just raise it now. In the early version of the application, if you had a owner who was not a U.S. citizen or permanent resident, so let's say that it's a partnership and one of the partners, and it's 4 partners each at 25%. One of the partners was a Mexican national. You were disqualified from the loan. They've changed that. That is no longer the case. So that's really good. But for the purposes of counting payroll, only people in the U.S. Count.
Ferdos asks, can we apply for the $10,000 grant without applying to the SBA loan?
No.
Sasha asks, for PPP, can expenses paid will be considered part of the employee wages or only base salary?
So it's salary and traditional benefits. Healthcare, which is the biggest, factors in. If as an employer you pay retirement, that factors in. Paid sick leave, if you offer that, that's a factored in. Vacation is the same way. So those benefits. I don't know that Florida, but if your locality or state imposes a tax on payroll, that counts, but your federal payroll taxes do not count.
Okay, so we have a few more questions.
Expenses, by the way, your expenses don't count as payroll. Those are expenses.
Robin asks, how long will it take to get the money from grant? Do I have my employees apply for unemployment until I receive the money?
That's a hard question. Everyone's going to have to make the decision kind of based on their circumstances. The things you're going to want to think through are, the benefits that are being provided and your obligations, particularly if you're trying to maximize loan forgiveness, about when to do that. But you know, you're going to want to look at the totality of everything to try to make the best decision. I'm sorry, I can't offer you better advice than that.
If you reduced FTEs and overall payroll below the 75%, does the math work out that your forgiveness will cover actual payroll during 8-week period?
So again, this is a two-part test, right? So the first part of the test is you want to calculate your maximum available amount of loan forgiveness. What that includes is what you spend in that 8-week period on qualified expenses, payroll, utilities, lease payments for your property. Then, after you've added all that up and you calculated that, then they applied the test on both reducing wages by more than 25% or reducing employee headcount. So it's a 1-2 step. And so if you've paid a lot in payroll in those 8 weeks, but you've cut people by 50%, you're going to get docked on your maximum amount of loan forgiveness. And by the way, the guide that I mentioned that the U.S. Chamber, we have blocks that show you the math, like add this up, multiply by, and then it gives you the options by which you can divide to arrive at your loan forgiveness amount.
Lisa asks, are condos and HOAs eligible for PPP or just EIDL?
For PPP, it is employers. So you think of it this way. It's either employers or the self-employed, and you're self-employed either as a self-employed, a sole proprietor, or an independent contractor. It is not designed for entities with no employment, no wages. You may have some ability through EIDL, though I'm not an expert on some of the other restrictions in EIDL.
Rhett says, please clarify. I have therapists who are ICs. They can apply for PPP and federal government with pay, and we'll pay them instead of our nonprofit.
So again, you're going to be the thing that everyone will want to be careful of, including your independent contractors, is double counting, right? And so if the independent contractor continues to be paid, and you're then taking a loan for the payment of your salaries, and you're taking both at the same time, we expect to get guidance on this in the next week, but I fully expect that you won't be able to do that, right? It's designed for when folks can't get paid.
Ken asks, how is disaster loan amount determined?
If you go to the SBA website, it's a multi-step, but it tells you the working capital and what you can apply for. And so it's a kind of a step-by-step process that they walk through for EIDL. It looks more like a traditional loan than PPP. PPP does not look like any traditional loan plan any of us have ever seen before. EIDL looks more like a traditional loan with a $10,000 grant tacked on.
Perry asks, under the affiliate rules, will non-U.S. employees be counted for under 500 purpose if those employees are not eligible for inclusion for purposes of determining payroll?
So this would be a situation in which you have more than 500 employees, but some number of them aren't U.S. residents, and so that would push you below 500. That's a great question. I don't know the answer to that. I haven't seen anything that contemplates that type of scenario. I worry that you may be caught in a no man's land there, based on the current guidance. But we're collecting issues like this so that we can continue to push for more clarity. And that's a really good one. I'm gonna add that to the list.
Next question, when does 8-week payroll time start? It starts now or after you get the PPP loan?
It's either the date of or the day after origination of the loan.
Lily asks, if the employer has to pay the PPP, what is the term and rate? Also, when they apply with the bank, is the bank going to qualify them based on their own cash flow formula?
So the 1% deferred for 6 months, but interest accrues during those 6 months, and it's a set 2-year term for the loan. So 2 years, 1%, no principal, no payments for 6 months. The bank is, for practical purposes on the PPP, underwriting has basically been kind of eliminated. So there is no personal guarantee, there's no collateral, there's no revenue requirements. What they're literally looking at is, did you exist? Did you have payroll expenses that meet these qualifications? So you should expect very minimal in that regard.
Randy says, just clarifying, a not-for-profit can apply for both PPP and small business loan. If so, are there limits on small business loan for NFP?
So a nonprofit, 501c3 can apply for both. Other nonprofits are excluded from the PPP. It's only C3s and C19s, which are a type of veterans organization. The same rule applies as would apply for a business, in the sense that you cannot apply for 2 loans for the same expenses. So you can't go to PPP to get your payroll, because it says, and then go to idle and get a loan for your payroll. But if you keep those separate, the current rules and regulations contemplate the possibility that you do that. By the way, if you've already gotten an idle loan, you have the opportunity, as you apply for a PPP, to roll that into your PPP loan, which could be quite advantageous.
Ken says, we have salary employees, some putting in extra work due to the situation. Are bonuses during the PPP frowned upon?
I don't know of anything no, not to my knowledge.
Okay, so I have a multi-part question here. What if you are an independent retailer currently closed due to the Florida shutdown through April and possibly May? If I am unable to use the 75% for payroll since we are closed and the CARE Act is an 8-week program, can we still use 25% for rent, utilities, and insurance?
So understand, the intention of the program is for you to pay your employees even though you're shut down and they are not working. That doesn't make in a normal world, that doesn't make a lot of sense, but that was their intention. Their intention here was they wanted to keep employees connected to employers and ideally keep more people off of unemployment insurance. And so the expectation is, in fact, when you apply for the loan, you certify that the things you will do with these loans are pay your employees and pay those expenses. And so that their intent is that you're paying those employees for those 8 weeks, even if you're shut down.
The next part to that question was, what is the interest rate and other lending terms on the remaining 75% if I'm unable to bring back my staff?
So the terms of the loan are the same. It's 1%, 2 years, and so it's just you would get less forgiveness. The thing that they added last night is, in addition to the 75%, 25%, that you would agree that you would not use the loan for unauthorized purposes. So that's a very vague thing. I don't know, but I think you would certainly want to be careful about, if you take the loan and using it for something beyond payroll, beyond the qualified expenses of what you're doing there and the potential ramifications. It's very unclear what the ramifications are, other than they tell you not to do that and they could come after you for fraud if you do.
So I know I only have a couple more minutes, so I'll ask just a couple more questions. If you originate PPP today, but run out of cash after 8 weeks and lay off, will you still be eligible for forgiveness from the PPP loan?
So this is where you're going to run into your problem with that second part test of not having the employees continue to be employed by June 30th. This is definitely an issue. I think a week and a half ago, when the parameters of this were being put together, I think we all thought that this was going to end sooner than maybe we do now. And so that was kind of less of a consideration. But those are you're going to want to think about that second part of reducing headcount and what that might do in terms of reducing your loan forgiveness as you think about timing, wherewithal, ability to do this. That's what the law says. I've been on several of these with where we've had senators participating as well. They're hearing about these things and they understand that there may be have to revisit it, but it'll have to be revisited by Congress.
I'm sorry I couldn't get to everyone's questions. They're still coming in, but one last question. Would expenses like purchase of computers for homework qualify towards PPP forgiveness?
No. So it doesn't fall into the categories of utilities. And by the way, all of those things beyond payroll has to be pursuant to an agreement prior to February 15th. So your lease, your interest on your mortgage, even utilities. You can't go rent something today and get that qualified for PPP forgiveness.
Awesome. Thank you so very much. I mean, the questions, I'm seeing them, they keep coming in and coming in. And this was very informative. We greatly appreciate you being here. Boss, do you have any final comments you'd like to say?
Yeah, let me just address the questions. Continue to send the questions into us. Neil and his team at the U.S. Chamber are just unbelievably accessible and helpful during this time. We can probably, if we can't answer the question, we can get it answered for you. So get the questions into us to Chastity or Sophia, and we'll still try to get those questions answered. As you are hearing from Neil, this thing is still very fluid. Last night they were tightening things up at 11 p.m. to go live this morning. That continues to happen every day, all day. There are no weekends anymore for anybody, especially for Neil and the U.S. Chamber team. So we'll do our very best to answer those questions. I also wanted to, just for everyone on the call, to encourage you to read the CEO messages that I send out at least 2 times a week. Some of the links that Neil talked about this morning, I included in our message yesterday that went out. So we're continuing to push extremely valuable content and information. We believe the U.S. Chamber being one of our primary partners in accessing that information and getting it out to you. The other thing I wanted to say was if you do not have a banking relationship right now, or it just ended, or you're having some struggle with that, and you need one, to contact us, and we can help you with that. Again, understanding that at least in the early phases of this program, that bankers are typically going to go with their existing relationships. But if you're in a situation right now, please communicate with us. You can communicate with me directly, and we'll try to help you in that space. I would just ask if Neil has maybe 30 seconds more. Tell us what can we expect in phase 4? I don't know what we're calling the next a piece of legislation that might be coming down the pike.
Yeah, they're calling it phase 4, and we're in the boil a pot of spaghetti and throw it against the wall phase. There's a lot of stuff going out there that people are saying they want on it. I'll tell you what we're focused on at the U.S. Chamber, which is what are the gaps in this bill? You know, where are the things that people got left out unintentionally that we want to help? And then as this evolves, we know things are going to be different. And what are the timely targeted things that we're going to need to do to make sure that businesses survive as we come through the next couple of months? There's plenty of time to do the long-term structural things everyone wants to do, and we'll have those debates. But you all can help us by telling us, gosh, we didn't anticipate this. This is a real need. Help us identify that, because that's what we're going to be focused on addressing.
Great. Well, Neil, I can't thank you enough for coming on this morning. I know you do these all day long, every day. Thanks for fighting the good fight for us up on the Hill and taking time this morning. Again, thank you for what you're doing in Washington to help us all get through this, these challenging times. And hopefully when phase 4 takes a little shape, we'll get you back on a Zoom call. But stay
plus,
safe.
when we get through this, I'm going to come down and visit you guys.
I hope so. That's what we want more than anything for now.
All right.
Neil, thank you so
Thanks.
much
Have
for
a great
everything.
day.
We really appreciate it.
Well, thank you guys so much for being here again. Neil, thank you. I keep seeing the tons of thank yous, and we appreciate you being here in the comments. So we appreciate you all being here. If you want to hang out with the Chamber today in about 20 minutes, we have another webinar for you with Dean Gropper of FAU. He's going to be speaking on the economic outlook in the midst of COVID-19. So you can jump on that call that starts at 10 a.m. If not, have a wonderful weekend. Stay safe, stay healthy, and we'll see you soon. Bye-bye.